Are you seeing any other services that could be provided or are likely to be provided as a result of the way the industry is moving? I'll give you an example. One of the things that we're seeing more of, and I'm hearing more of, is people are moving more to the sourcing model where they're using the custodians to do FX servicing, like they're doing FX executions. They're doing more around like, I'll give you my middle office, you take care of it, so I don't have to worry about that. I'll just do the execution with the broker, and then you take care of the rest. Are you seeing that and other things coming to the fore more with like T1 and T0 and whatever else coming along the reg path and other paths? What are you seeing?
So in terms of sourcing, yeah, that is definitely happening because of the cost pressures, right? But I think whilst we do that, we need to consciously weigh the impact that it would have on long-term innovation. Because whilst we do that, then we struggle to innovate because they've got their own stack. So I think whilst we continue, we should do that. But whilst we do that, we should consciously think about, okay, what are the technologies that we can look to consolidate whilst we kind of look to outsource or source.
And I guess the other side of the equation is you then have to deal with the broker dealers, which previously the asset managers had to deal with, right? So that becomes your problem. And traditionally, in my experience, they don't have a contractual relationship with you, so they actually invariably know who the custodian is in the relationship, so they don't know who to talk to. So they always go back to the asset manager, which at that point is somewhat asinine and stupid. So how do we square that circle in terms of getting the three parties to the trade to talk one another better?
Look, I guess two thoughts on this. The first one is outsourcing has a maturity curve to it, and from simple to more complex. And I think every year on year you see the capabilities evolve on the ability to service in a satisfactory way the more complicated things that you do. And I think with that is coming the uptake of extended services, whether it's trading, hedging, collateral type services that service providers are now evolving and able to provide, and you know, asset managers are taking more seriously on board. I think that'll continue. I think that comes with what we talked about earlier, the need to feel comfortable as an asset manager that you still have control, visibility, oversight, governance, and stewardship of what you're trying to do, but someone else has built and consistently investing in the technology to just do it better on an ongoing basis. So there's, you know, that's the argument for continued outsourcing and the tech changes along with it. I think that one of the other things that we're going to see the landscape probably shift more in will be more fundamental. So there's a speed and a pace to things that is going to close the gap. And while there's cost pressures at the moment, we have sort of an adage I think most can appreciate here if you're in an ops world, that like after the trade's been executed, there's not much competition that happens across asset managers. Like everyone's solving the same problem. Just process a trade, account for it, do the rest of the things you need to do. So everyone is doing the same thing in different places and creating and establishing and trying to run the best processes that they can. And there is probably an ongoing sort of path towards a convergence point where you just appreciate that if everyone's solving the same problem, then you just give it to someone who does it best and create a utility element to market infrastructure that does that for you, and you can focus more on your value-added differentiators as a firm. And I think that's probably the competing landscape for serious network and service providers in the future, where we have, again, digital-enabled sort of market infrastructure potential, and folks, they just don't want to be doing things that they have to keep investing in as an asset manager that doesn't add value, because all you try to do is do it in the most efficient way and at the least risk. And we've been on that journey for a long time, and if you're in ops, you know that like you can only squeeze it so far before you start cutting into bone, and then you have risks emerge, and then people say, and then you have to invest because now you've gone too lean, and now you need to fix what you've done, and so you have this ebb and flow constantly. And I think COVID brought to the surface the importance of operations in organizations, because now suddenly everyone's like, oh my God, how do we keep the lights on, and are we okay? But we do have all of this activity that's happening that is not differentiated, and that is probably a matter of time to solve for. When that tips, if that's 5 years, 10 years, 15, I have no glass ball on this. I don't know. This is Sean's view of the world to a certain extent, not Alpha's house view, but that is the direction I think most folks would agree on is happening, that we just have, this is space where differentiation doesn't add value.
And then I guess to pick up on your point around utilities, I do agree that utilities potentially are something that become more prevalent, and how you build those utilities is important. But then the flip side of that is you've got to make sure that you've got good controls and, you know, robustness and resiliency over that. And how do you demonstrate? Because the regulators of every aspect of the financial markets are asking more of everybody in terms of how they're maintaining control over their day-to-day control functions. And that becomes harder the more you give up to other people.
100%.
Yeah.
100%. It'll change the way we do work.
Yeah.
But that won't be unique to this industry.
Yeah.
That'll happen in a lot of places.